The NASDAQ composite has fallen 11.2% this year from its high. And it might not be an accident. A handful of powerful individuals have been planning this crash for a while. I have information I need to share with you that, if true, could make or break your stock portfolio this year. But most importantly, I have the vital actions you need to take that are probably the complete opposite of what you think to prepare for this. Now, this is a theory I saw about 2 or 3 weeks ago on a major economic channel. And somebody said that they think Trump is purposely trying to trigger a recession, which would then probably trigger an economic collapse and a recession of some sort. When I say collapse, I don't mean like COVID or great financial crisis, but we've been so spoiled by this growing economy. Now, the rationale behind this is that Trump is early into office. If he forces this recession to happen, he could then essentially force the Fed to cut interest rates, which is what he wants to do. The U.S. has significant debt coming due. 10-year Treasury yields are much higher than before. This is the 10-year Treasury going back 10 years. Guys, even going back 10 years, look how low we are. And imagine if they were taking on debt right here, which they were doing. As you took on this low debt, this interest rate is locked in for 10 years. Well, guess what? From 10 years ago, the interest rates that were being done back then were about 2%. Now they're over 4%. So they borrowed $10 trillion 10 years ago. They were paying $200 billion a year on that money. But now all of a sudden it comes due. They can issue another 10-year treasury at 4%. That $200 billion doubles and causes us to lose more money financially. Now, guys, here's our expenditures. Federal government current expenditures, interest payments. 10 years ago, we were spending about $450 billion. COVID, about $500 billion. Guys, we have now eclipsed $1.1 trillion. And guess what? This doesn't come with more revenue. This just comes with more expense. $600 billion difference from 5 years ago. That's a lot of money. So if you're in charge of the government, do you see why you might want a recession? You see why you might want lower rates for a while? That way they can refinance some of these interest costs and have this at least flatten out or go down a little bit. If a recession happens early in Trump's term, there's another addition to him. He can blame Biden. Now, before we get into Trump and politics, I want everybody to know, if you hate Trump, you're going to hear what you want to hear in this. If you love Trump, you're going to hear what you're going to want to hear in this one. I'm purely coming from a perspective of, okay, what would I be thinking about as president of the United States? And if I'm Trump, I'm literally thinking to myself, hell, if I cause a recession now, I got years to make it up. Because at the end of the day, people are going to remember the last thing I did. In addition, it's so early on, he can just blame Biden. And a lot of his followers will believe that. He has time to stimulate the economy and the economic recovery before the next election cycle. People tend to remember how an administration ends, not how it starts. Look at it this way. Look at Bush. Bush handled 9/11, and he got a 90%, 92% approval rating, and he only won by 3.5 points in his follow-up election, which was still a big win, but not nearly if it happened right after 9/11. So if Trump leaves office after this recession that he then decided to grow, he leaves office as a hero by overseeing an economic rebound. If there's a crash early on, who does he blame? He just blames Biden, the crash happens, and then the recovery continues from there. The recession would be short-term pain for long-term political gain. He can take credit for locking in lower rates on debt. Now, before I share with you the steps you need to take if the market continues to fall, let me now share with you the cons of this strategy. Guys, the only con I see in this whole thing is short-term. If it's short-term, then he has the time to go make this thing recover. Remember, again, looking at Bush. Bush left office in the middle of the great financial crisis. People blamed Bush for the financial crisis. There's a lot of political risks if the recovery doesn't go as planned. Remember, we've been riding this long economic growth for a very long time. How long will it take for things to really recover? Remember, we had 08 and 09. That was the real estate debacle. I still remember in 11 and 12, people thinking that real estate was still bad. Now, that's a human thing, not an actual thing, because I made the most money from 09 and 12 on real estate. But the perception was it was bad. This theory does make logical sense from a strategic standpoint. However, it remains speculative and unconfirmed. The market's reaction will depend on several things: actual policy moves, not just theories, and people's inner feelings about these things. Remember, in the short run, stocks are a voting machine. In the long run, they're a weighing machine. If people don't like these things, they're going to vote stocks down. Now, if you're new to this channel, I pull up this chart all the time. This goes back to 1950. This is just a fraction. I would say probably 0.5% of all the things that have happened, if not less, in our economy and in the world since 1950. And this isn't really a true representation of the stock market because this is a logarithmic chart. The actual chart looks like this. It's incredible. It actually looks like this. That's what it looks like. Now, along the way, there were blips. You know, blip, 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 blip. These blips, by the way, do you even see the COVID blip right here? Do you even see it? We don't even see it on the chart. That's what's incredible. And if I told you to pick the best times to buy stocks, you'd have picked here, 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 here. You get my drift. You'd have picked every little bottom of the market, right? But the true thing is that you should have been investing all the way along. Why? Because stocks go like this in terms of their value, but their price goes like this. And you don't know when it's going to be here, and you don't know when it's going to be here. A lot of times I thought we were here when we were actually here. A lot of times I thought we were here and we were actually here. But what do? I just keep buying stocks that make sense to me. I did make mistakes since COVID of not buying all the way up here. That was a big mistake. Now, I bought starting about 2 years ago, and I've been very happy I did for those stocks I actually bought. We're here to teach that process, but first and foremost, you dollar cost average into low cost ETFs. Now, what do most people want to do? Most people out there want to time the market. They would say, what's on the horizon here that's going to cause a problem? Let me exit that. I hear this all the freaking time. And guys, it doesn't work. And let me prove it to you right here with the numbers. And I do this all the time, and it's so important to understand. Guys, the NASDAQ peaked in March of 2000. It peaked at around 5,100. It went on to fall about 80% from there until August of 2022. So this is of 2000, and it bottomed in August of 2002. Guys, if you started dollar cost averaging at the very peak of the market and watched it fall over 80% and kept going until today without dividends, you would have made about 13.22%. Now, that's pretty awesome. What if you bought exactly at the low of August 2002? So you picked the exact bottom after 80% fall. You saw an 80% fall and you're like, yeah, I'm gonna go kill it. You know how much you made? 14.35. This doesn't include dividends. Add about 0.6 or 0.7 to that. So you barely beat by an extra percent overall. Is that a lot of money? Absolutely. But it required you to be a perfect market timer. And take it from me, it does not work. And not only do you have to be a perfect market timer, you have to hold through everything else and all the junk along the way. So you would have already been cocky going, I timed this perfectly. So when 08 happened, you'd have to sit there and wait it out and hope that you go through it. During COVID, you had to wait it out again and watch a 40, 50% fall in the NASDAQ during that 1 month. Is that likely to happen? Or would you have this wake up and go, you know what? I'm willing to sacrifice 1% a year because I'm better off just doing that. I will make more money. And every piece of evidence shows that retail investors who try to get in and out of the market trail the market by 3 to 4% a year. Guys, how big is that? Over a 30-year, 40-year career, that could be the difference between having 1 million in retirement versus 3 million in retirement. We're talking about 3x your money, 1/3 your money by you trying to be smarter than you actually are. And guess what, guys? I'm not talking about you. I'm talking about everybody. Everybody's like that. So if you want to beat 99.9% of the Harvard MBAs, the MIT, guys, all your friends, dollar cost average. Now, that doesn't mean you shouldn't buy stocks. I love buying individual stocks. But make sure you're meeting your requirements for your retirement and for your future with your low-cost ETFs. Then learn a process, hopefully through us or through somebody else that makes sense to you, where you can buy individual companies. But remember, you're never going to buy at the bottom. Even Facebook, I bought Meta at the very bottom. You're like, Paul, you just said nobody buys at the bottom. Yeah, but I started buying a lot higher than the bottom. I just happened to get lucky on the day of putting a buy order in, and I got that low price. Guess what? I sold it at $195 because I thought it ran up too much. Look how much I've missed out on. So I was so smart to buy at the bottom, and yet I missed out on how much opportunity. Learn from my mistakes. So guys, if you want to see our next video, click on this link. The 2025 stock market crash will make millionaires. I 100% believe that'll happen for this crash and every other crash in the future. Thank you for your time.